The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, welcome back here to the Diagnostic Trading Hour. And just checking out where the markets are at right now. We got the S&P. It's up 20 points. We got the Nasdaq up 45. The Dow is currently up 12 points on the day. Looking on over, not Dow, the Russell's up 12 points. The Dow's up 171. Yeah, so Dow's up 171 points. We got gold. It's down a whole tick. So big moves there on gold. But we'll go back. We'll look at the actual intraday detail. That just tells a little bit of the story there. And because it went quite a bit higher, about 20 points higher. Let's go. We go get silver. On silver right now, we got it's up a little over 0.5%. We got copper is up over 1% right now. So big moves on the ag markets there. Not the ag, the metal markets. And it's been a long night, long day with all the good activity going on. So it's been trading away. We got oil right now. It is currently up 20 cents. We have natural gas. It's down 1.5% on the day at the moment. Corn's just down a mere tick. Soybeans is up 12.5 points. It's about a 1% move on soybeans. And looking over at euro dollar, it is currently up 66 pips. And we got pound dollar up 21. We got Aussie dollar is currently up 61. Euro yen up $1.30. So nice big move there on euro yen. US yen up 42. Pound yen up $1.11. So nice move there on pound yen. Pound dollar a lot quieter. Dollar CAD currently down 15 pips. Dollar franc down 36 pips on the day. And let's dig a little deeper into all this and see. I want to do a couple other things before we move on, but I want to go into the news with you and just talk about the news and, you know, how you can potentially use the news on these trades. And we looked at the news yesterday, and I talked about, you know, what to look for today. I went into a few different details for you. But the main two trades we were looking at this morning were basically going into the pound interest rate and the ECB interest rate, mainly the press conference there. That's usually the biggest mover out of all that. Also, we had Vodafone come out there on NASDAQ, and so be aware of that because obviously that had an impact on it. And, we got the natural gas inventory reports that came out today. IBPMI came out at 10 a.m. The monetary policy statement, be aware, that comes out tonight. So we'll go forward here in a minute. First, let's go backwards. And one of the things I mentioned, which is just something to, start picking up the little tips and little tricks that help out on these things. But what I mentioned was looking at the pound and being aware that sometimes you just don't get that move real fast. And talking to some traders this morning, was looking at it, and the report comes out at 7 a.m. And the challenge there is you don't have a longer-term spread. You basically have like the 7, like if you get in before 7, you got the 7 o'clock spread, you got the 8 o'clock spread. And that only gives you 1 hour for the market to move. And so you can do the spreads, and if it does bust a move, then awesome. But if it doesn't, then you haven't really given yourself any time to allow the trade to even potentially work out. And so it's really wise to make sure that you are looking at those details. So let's look at some of them. And, one of the things I talked about is, on this trade, you might really be better off looking at a strangle. So let's look at, we got open to low, obviously very small move there. 18 pips. We got open to high. Okay, so right here, 59 pips. If we go open to high at 11, it's about 47, okay? But the measurement I always give you is the high to the low. So let's look at the high to the low after the news up to 11 o'clock. We get about 68 pips. What were we looking for on the pound dollar on a high to low? The range on that, the expectation was, looks like, actually about 85, 90 pips. So we really didn't get a massive move there. But it did end pretty close to that high range. So if you had the 11 o'clocks, you might have been able to get that out. Now the strangles, you'll be able to do closer and get that 1-to-1 closer. Okay? So when you put those trades on, they're a lot easier to match them up. But you also want to look across different currency pairs. Don't just put all your money in the pound dollar, and if that works out, then you're into the euro dollar. Okay? Understand you got two of these things coming up back to back. Put some into pound, put some also in the euro when the euro announcement comes out. And also, don't forget, you got pound yen and euro yen. And pound yen actually has more volatility. So let's go over, let's look at the pound yen, and let's see how it did this morning on the pound's interest rate announcements. Well, looking at that, what we can see is right here, if we go back, and let's say we'll just start at 6, okay? And we go to high on that. We got 118 pips from entry. If we go from the news to high, we got 139 pips. If we go from news to low, we got 14. If we go from high to low, right there, looking at basically the high to low before 11, we got 162. So obviously a lot more volatility there. And pound yen does have just basically every hour of the day has, and I have like a breakdown of reports on looking at everything to see what is the movement. I go down, I look at it. See here if I got this expected range thing that I've been working on. And I got to switch over to like hour bars to be able to pull that up. So I may go in. Let me go in and remove that from here. And then click OK. Got that knocked out. Now let me go over to my hourly chart. And we'll switch back on over to pound yen. And then I'll put this chart up here. And basically what I'm showing down here at the bottom, the gold line is basically the average move on that hour of the day, that day of the week, over the last 10 weeks, okay? And then the blue line is actually where it's at. So you can see it actually lines up really well. Obviously, we got that big spike right there at 10, and it surpassed it. Often when you see it do a large surpassing, you'll see it actually pull back. Meaning, actually, like the following hour, a lot of times you'll have, less volatility for maybe an hour or two than normal because it just spikes up. So when you get the massive spike, again, expect that range to pull back. And, now we're later in the day. We're going into the, 1 o'clock, 2 o'clock time frame here. So it's actually dropping back pretty quick. We can go back and we can look and to see, nighttime, daytime, whatever. We're pretty much right along that expected range. And why does that matter to me? Okay? Well, if I'm going, I'm looking at this, and I want to compare it, and I'm going, okay, well, the expected range at time of day, is what? So average there is like 40 pips. 6 a.m., about 7 a.m., drops a little bit at 8, down to about 26, and then it bumps on up to about 50 pips in the 9 a.m. hour there, so 8 to 9. So, we're looking anywhere from, 25 is the lowest point we had, and the highest point, 67, with most of them being right around 40, okay? We flip over to pound dollar. Now let's see what we have. And pound dollar is pretty volatile, usually. And this is, like I said, this is a little less volatile than I would expect. But let's pull it up. Let's look at what the average range is on it. Okay, it looks bigger, but looks can be deceiving. So let's look at 6. So we got like 16 pips expected, not 40. 24. 24, 37 is as high as we went on expectations of movement. That was that big hour on the other one that was like 60. So you're talking like twice the volatility over the pound yen. Now that some of that volatility is going to be priced in, so it may cost a little more, but it moves more. So you put the two pieces together. So just understanding that volatility there can help out a whole lot when you're doing these news trades and trying to pick which currency pair to do them on. Now a very simple one, especially for just getting started, trying to put all the pieces together, is you can go in and you can very simply just spread it across. So do instead of if you're going to do 2 contracts, do 1 pound yen strangle and 1 pound dollar strangle, or 1 pound yen straddle, 1 pound dollar straddle, whatever. Okay? Could you have done the straddle? Would it have worked out? Straddle, I don't care if you did pound dollar, pound yen this morning. Didn't work because it expired too soon. It only had an hour. And it usually has a pop, and then it goes flat, waiting on the euro announcement. So it's one of the things you want to write in your trading journal for when the pound euro comes out. They usually come out about the same week as NFP. When they come out, pound will come out, it'll go flat, but then it usually will take off. In this case, pound yen took off a whole lot more. So yen was obviously a big driving factor in that. And just pound's volatile, yen's volatile. You stick the two together, you get extremely volatile. Now, let's go also at the euro dollar. How did that one work out? Okay? And again, if you're going to do, ideally spread it across. So let's, think about it as like 4 contracts, maybe $25 a piece, okay, or whatever. And 1 pound dollar, 1 pound yen, and then when the other one comes up, 1 euro dollar, 1 euro yen. So if you got to limit yourself, I probably would focus on the euro announcement. You may miss out, but you at least get the the advantage of not having to do a 1 hour only expiration contract. So we look at this. We start looking at pretty much right at 7, and the details on the ECB. It comes out at or like 7:45 is like when the interest information is released, but what matters is the press conference most of the time, and that happens at 8:30. And I try to get in before both, just so I can take advantage of it. You can see the release came out. You did get a little drop there. That's that drop. But then the press conference came out, and Druggy started talking, all that fun stuff, and that's when the move happened. Okay, that's the big move you're focusing on. Some people I know will wait. Now, if they do surprise you on the next trade, it could take off. The IV could go higher, all that stuff. But there could be an advantage to waiting. So you might even tier in. A couple different ways to look at it. We'll look at it in more detail when we get back, and then we'll talk about tomorrow's report. Stay right there.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks. Welcome on back here to the Diagnostic Trading Hour. Okay, so we're going in, we're looking at, several of the pieces, talking about, doing euro dollar, doing euro yen. What kind of movement did we get on the euro dollar this morning? This morning, if we look at it, you got in around 7. We got a nice move up there of 100 pips. So, solid, good move. And if we go over here and we go, low to high, pre-11 a.m. there, we got 135 pips. So, obviously, more than sufficient to do the trade. Popped up, by the way, to 1 deviation level and just been flat ever since. So, just sort of watching that now and seeing, I think it may come back down eventually down here to this magnet level. So the low at 34, 82. But it'll probably take its sweet time. So, on that. Let's go ahead. Let's check out the euro yen. Euro yen, basically the exact same thing, except for it moved further. It moved 1.5 deviations. Our low to high on this trade right here was 210 pips. So, nice, solid, big move there on euro yen on the ECB interest rate announcement. Very, very simple trading method that you easily could have been able to, take advantage of. Let's see what else. We got the what do we have? Okay, so we're going to have the next announcement that we want to look at. I guess we have an announcement tonight. It's one that I'd be more careful on, okay? Not necessarily my favorite trade, but one that I definitely want to be a little more careful on here, and that's going to be the Australian interest rate announcement. And the reason I'm saying not my favorite trade is just because all this stuff's been coming out, all this news and everything on the Aussie. and it's just had some big moves lately. So, and due to that, I actually don't really trade the monetary policy statement. If anything, I will do a butterfly and all that. But however, I'm not going to do one on this one just because they had such a massive move on their last interest rate announcement. I just don't think it would be a wise thing to do. So, we could get some volatility off of it, but it's more of you really need to be aware that it's coming out if you're an Aussie trader. So just be watching that around that time, okay? So 7:30, if you're an Aussie trader, just be aware of it. It could cause some crazy little moves, and you don't want to get knocked out of the trade before it even gets started. Okay, so let's go in tomorrow. Tomorrow we got you got a big variety of things you can trade, okay? You got dollar CAD, usually one of my favorite trades. Again, you should be spreading your risk across several of these pairs. These are all going to happen at the same time. And got a nice move right there. Got over a deviation high to low. We pulled back now a little bit, about a quarter off of the deviation high. And what you want to look at is dollar CAD. They're going to have their employment change. It's coming out. It's like 13.3 is the expectation on the employment change for the dollar CAD, for the CAD. Sorry. And so 39,000 would be a strong CAD, so it'd be like short dollar CAD. 18,000 would be a really weak number for the CAD, so it'd be buying the dollar CAD. If you buy the dollar, you're selling the CAD. It can be a little bit confusing when you flip that dollar on the other side there. And then they have their unemployment rate coming in at 6.9. So if the number is higher and the employment rate changes, you might want to get out of break even. If the unemployment number is lower and the employment change is lower, then you might look at get at break even because they're conflicting. Like one's saying better, one's saying worse. So that's a couple of the things I watch out for on that. What kind of move are you looking at? About 80 pips on the dollar CAD within a couple hours. So the announcement comes out at 8:30. Market opens at 9:30. Okay, that market open will sometimes give you that oomph that you need. And so I'll definitely be looking at 10, ideally even 11 o'clock, expiration possibilities when I do this trade. And, for maybe binaries, 10 o'clock for spreads. I'll also look at the 3 o'clock because sometimes the 3 o'clocks are like a few bucks more. And it's worth it because if it just takes off, you can just trail it. Okay? So we're going to have that dollar CAD right there, 80 pips expected range. 80% of the time it breaks 50 pips. So this is a nice high probability trade setup. Going on over and looking at the NFP and unemployment numbers. What we can do is check out, let's see, NFP. We're looking at 7.1 and 184,000 on NFP. So I'll talk about what a low and strong NFP and unemployment number means, and then how you can trade that. We'll do that when we get back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, come on back here to the Diagnostic Trading Hour. And so we're just going, like I said, through everything step by step. And try to make sure you have the information you need to ideally execute some news trades profitably. So let's keep progressing on here. We're on the dollar CAD last. We wrapped that one up. At the exact same time, we're going to have the NFP report coming out. That's part of what helps this trade out. Okay, so you got the CAD employment information and the dollar employment information coming out. So now if they're mixed a little bit, that can inhibit the CAD. If they're both the same, like, how do I put this? Let's say you have good dollar and bad CAD information, like, it'll fly up. Or if you have bad dollar and good, bad dollar, good CAD information, it'll fly down. If they're mixed up, you still get volatility. They can just slow it down a little bit. But let's see here. Going in and looking at everything. Okay, so euro dollar, what we're looking at on that is 100% of the time over the last 2 years, I hate to even say that number, I'll just want to say 99.99 or something, it has moved at least 50 pips within 2 hours, okay? The average move, and this is by the euro dollar and euro yen, by the way, okay? The average move is 100 pips. So this is on the NFP within 2 hours after the announcement that comes out at 8:30. The dollar franc, 88% of the time, breaks 50 pips. Average move is actually 110 110, and I think that's come down a little bit, but still it's 90 to 110 range. Okay? The pound dollar pound yen, 88% of the time, it's broken 50 pips. Average move is a little over 100 pips on either one of those, pound dollar or pound yen. Aussie dollar, Aussie yen, 83% of the time on an FP, it breaks 50 pips. Average range, high to low, 60 pips. Okay? So why would you do that over the others? They're 100 pips. Well, it may be a lot cheaper. Maybe the pound will be way too expensive and you can't do it. But the Aussie's right in that range. Okay? It still has a decent high percentage. That's Aussie dollar, Aussie yen. Dollar yen, 67% of the time. So now we're getting down to the lower number here, okay? It breaks 50 pips. Average move is 80. I would rather take the Aussie dollar, Aussie yen with a 60 pip move that has an 83% probability of breaking 50 pips over, historical probability than I would the dollar yen with a higher move of 80 pips, but only a 67% historical probability of moving that far. So dollar yen's like on the bottom of my list. I would not recommend it. I don't recommend any of them. You got to do what you want to do, but I would avoid that one. Now, as far as euro dollar, euro franc, U.S. franc, pound dollar, pound yen, dollar CAD, which ones do I pick? You may not even have a choice, okay? I mean, you'll have a choice, but sometimes the spreads don't line up. Sometimes you can't find the right binaries. I mean, I'll go in and look at trades sometimes, and I have the cool thing about knowing euro dollar, euro yen, dollar franc, pound dollar, pound yen, dollar CAD. You got, what is that? 1, 2, 3, 4, 5, 6, even 7 with Aussie dollar, 8. So you got 8 different instruments you can look at, and that allows you to really, find the best ones, because sometimes the spreads just don't line up real well for you. You can also, if you can't find any, you hop over to the binaries. But definitely, spread it out a little bit. Don't put it all on euro dollar, euro yen. Maybe do a euro yen, maybe do a pound yen, maybe do an Aussie yen, maybe do a pound yen, and you do a dollar CAD. So, but out of all those combined, I try to, if you're going to do more than one contract, meaning you're not just going to do one strangle, if you're going to do one, focus on a yen pair would be probably the best thing to do. Like a pound yen, Aussie yen, euro yen. But if you're going to do more than one, if you're going to do 2 contracts, 3 contracts, 4 contracts, spread it between different instruments. So let it hedge out. So if one of them doesn't move, or 2 of them doesn't move, but 2 of them do, at least you're break even. You're like, yeah, but then I'm break even. Yeah, well, you know what? If you would have put all of it, all the money into just 2 of them, and they didn't move, then you'd lose. So more often than not, especially on this report, we expect some good moves, pretty much across the board. But who knows what currency, for whatever reason, is going to be the laggard, and you want to, like I said, to spread that risk around a little bit, and that's the best thing you can do as far as it's just it's a good hedging mechanism. Like this morning, pound dollar, pound yen, really didn't do anything for you. Euro dollar, euro yen did. Pound dollar, pound yen on the strangles, no problem. Easy, or at least pound yen on the strangles, no problem. Made good money. Euro dollar, euro yen, straddles, and strangles both knocked it out of the park. So if you would have had, let's just say, a pound dollar and pound yen straddle and strangle, a euro dollar, euro yen straddle and strangle, then that would have been 8 total positions, okay? And let's just say your pound dollar and your pound yen straddle didn't work out. Your pound dollar strangle didn't work out. But your pound yen strangle did work out. Your euro dollar, euro yen strangle, both of those worked out. And your euro dollar and euro yen straddles both worked out. Then you come out net positive on all that. And it becomes more to manage, so you got to get it down. Granted, I understand doing more than one position, start going to 2, 3, 4. But that's where the scanner comes in, okay? The scanner allows you to do more and keep it simple because it does all the math for you. And you just got to pull it up, you got to look at it, and then you can look at multiple instruments simultaneously, and you can put in your simple parameters. So what parameters would you put in on the scanner? Well, if we're looking for straddles, okay, we're going to go over here, And we go, okay, what are we looking at trading? Well, tomorrow morning, dollar CAD, Aussie dollar, euro dollar, pound yen, euro yen. All right, I got 6 pairs that I can do straddles and or strangles on. That's actually up to 12 trades. 12 different positions I can have on at once. That can be pretty daunting, okay? I'm going to say both directions. I'm going to get rid of my proximity. So let's just say reset filters. Make it easy. Reset filters. And I'm going to say risk-reward ratio. I'm doing a straddle. Since I'm doing a straddle, I'm going to put 1. And then max risk, I'm going to put 100, just because I don't want the big spreads on this. I want to get closer to the floor ceiling. And then I'm going to scroll down, okay? And I'm going to look and see, what do I have that might be a potential trade. And so I'll start lining pieces up and going, okay, let's see here, that right there. Which one is that? That's the, and you can highlight up here, which is nice by doing that, 3 p.m. So I got this over here, this 3, actually let's agree with it. So 3 p.m. right there. And then I got the other side, on the buy side, the 3 p.m. So I could look at that. I go, well, what if I went a little bit lower? No more risk. Okay, there's a great strangle. Okay, or straddle. That straddle right there, risk of $20, $195 profit potential. It also eliminates all these other choices that I don't need. I mean, yeah, I could do these, but look at them. I'm going to trade, risk about the same amount of money. Got a $20 at risk, or let's see, about $15 at risk. Okay, versus 17. But in doing so, I limit my profit potential, for a few dollars. And I may decide to actually trail it. I'll trail it on some of them. So I want to look at a 1-to-1, and usually what I'll do, now this is as you get bigger in your position size, but usually what I'll do is I'll put like half out at 1-to-1. And that way, whether I do something stupid or whatever, at least I can break even on the trade. And then, then I can trail the other half and let my profits run. So now you could just trail it, whatever. But simple method, go for 1-to-1. Once you get that down and you have that working, then learn to trail your stops. But so there's the Aussie. Okay, I go down here. Let's find the pound yen. I mean, you just literally just rinse and repeat. Okay, over and over again. It's like, all right, well, there's the buy. Let's see, 167.50. I'll find that over here. See if I can find a correlated sell. If there even is one. So we can click them all and see. It'll be a 3 o'clock if it's correlated. And, okay, looks like that actually, that green one right there. So notice how we're imbalanced. You wouldn't even see this in the Nadex platform unless you're hopping back and forth. But that gives me a good balanced, potential risk-reward trade. Probably a little, that's actually not bad. That's $22. And make a lot more, obviously it goes down. But still have a good profit on the way up. And it's balanced out. If I go up to this one right here, see how that doesn't help? Like now I'm way out there. I couldn't choose this one, but why would I? I mean, $3 more in risk. I'd rather take that trade right there. And slight difference, but not bad. But you could do either one, I guess, if you wanted to. You're talking 5 ticks of difference between them. And so sometimes I'll do 2 different 3 o'clock expirations. I'll have the intraday expiration here, and I'll have the daily expiration there. And you can literally just go down. You find them all. Now start doing this before the announcement. Don't go in like 3 minutes before and expect that you're going to be able to go through. Okay? So these things open up at 7. The announcement doesn't come out till 8:30. Okay? You have time. So at 7, when all these spreads open up and start going, that's when you sit down. You want to go through currency pair by currency pair until you find the one that you're looking for. So like, there we go. And the way I'm doing it, by the way, when I'm looking at this, I'm looking at the gray line, and that's the live price. And I'm like, okay, well, obviously I'm not interested in a lot of this random stuff over here. Okay, so it's one of the blue ones, and my estimation was just that it would be the 3 o'clock one. But so there's a 3 o'clock one there. I can click it. It's like, oh, that's not the one I want. Oh, okay, that's the one I want. So there we go. So now I just find a correlated one. Well, 139.60 is the ceiling. Let's see here. Let's find something close. 138.60 is the ceiling. So there we go, 138.60. There we go. So I can go down. Even on these big move days, not hard to find a good strike. So right there. Is that one? Do I like that one? No. Do I like that one? Yeah, but there's only 13 minutes, so it's not going to be useful. Let's see. What about here? No, it's still pretty deep in the money. What about here? Nope. You know what? No trade on euro-dollar. So, going through this, I'm able to analyze. I analyzed euro-yen. I analyzed dollar-CAD. Pound-dollar. We haven't done that one yet. Okay, so let's look at that. Let's see. Is that the one I want? No, that's too deep. By too deep, I mean like it's wrapping around that line too much. Okay, there we go. That's a good one. So 63.40, go down here. Let's find a 63.40. That's 13 minutes. That ain't going to work. 73 minutes. Sweet. Okay, there we go. $15 risk on that trade. So we just went through here in like a few minutes. And I honestly know, yeah, it's going to take you a little longer just because you're new. But I'm just looking for the one that's close to the price. Okay? The floor is close to the price on the buy. The ceiling, this upper number, is close to the current price on the buy. But we just got Aussie dollar, pound yen, pound dollar, dollar CAD, euro yen, euro dollar, on down the list. And all we got to do is click a button and open the ticket. Okay, directly in the platform. So once that's done, then what's cool is then all the positions end up in your account. Okay, and they show up in the trade tracker at the top, and then you can go in and you can put in all your take profits. And it'll actually link the trade profits with the open positions at the same time, versus having like take profit orders over on this screen and open positions over on this screen like you have the Nadex platform. It puts the two together. So you can see which ones have I put my take profits on, which ones have I not put my take profits on, and it makes it a lot easier to edit them, update them, and make sure everything's correct. But, I mean, that's the process I go through in the morning. And sometimes I do this on my phone. So I'll pull up. Now I have a bigger phone. I have a Note 3, big phablet phone. But I'll pull it up and open up the scanner, and I'll literally just go down. Now, I can't open the ticket from the scanner on a phone because phones don't allow multi-browser, cross-browser integration feeds or whatever. But not yet anyway. But what I can do is I can at least find the strikes and then open my Nadex app, Android, Windows, iPhone, whatever, and then I can hop on there and place my order directly. So you can do this whether you're, at work, whether you're on your computer, whatever, you have access to it. And this is a whole lot, especially if you're doing the Nadex app. I mean, if you're sitting there on your phone trying to click between all the different expirations, it's hard enough on a computer, much less on a phone. So this will allow you to easily go, okay, I want the 8960, 9160, and I want the 8760, 8960. 3 p.m. expiration. And you might rate that down if you're doing it on your phone, And then hop over, app, okay, 3 o'clock, I want these. And a little trick for you to help out on the spreads. If they're wider, see how that's 200 and that's 100 right there? Okay? If they're wider, that means they have a longer expiration. So your intraday, your 1 to 3s are going to be your 100 tick wide ones. Your 200s, that's the ones that started at 7 a.m. All right. We'll stay right there. We'll come back. We'll wrap up a few more pieces for you. And I'll be right back.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Back here to the Diagnostic Trading Hour. And, okay, so we talked about step-by-step how to go through that. Let's see if there's anything else you need to be aware of that I got on my calendar list here. Nothing real big, so we're coming closer to the end of the big earnings season. We'll have a few earnings next week. Let's see, what are we going to have coming up? We're going to have Coca-Cola. It's going to be coming out on Dow Jones right there. Symbol is KO. And that'll be coming out on, looks like Tuesday at 7:30. Cisco, Dow Jones, and NASDAQ both listed. Be coming out at 4:05. So that's an important for you end-of-day traders out there. It's the only two major ones I have on my list, for next week as far as the earnings announcements go. And then looking at what do we have to look forward to next week. Nothing happening Saturday. Nothing happening Sunday. Monday, daytime, pretty much nothing. Japan will have a bank holiday Monday. Be aware of that, yen traders. Nothing else of consequence to even worry about. Tuesday will be interesting. 10 a.m. This isn't so much a news trade, but federal chairman, the new Fed head, Yellen, will be, wow, that's just going to be fun, is going to be testifying. And let's see, what does it say? The text of the speech is due to be released 90 minutes earlier than the speaking time listed. Oh, so that's important. Okay? So she's talking at 10, but the text of what she's going to say is going to come out at 8:30. Okay? So now she'll come out, she'll read her prepared statement, and then there'll be a Q&A session at 10. So there's like the statement comes out, and we're going to get some insight into where she's going. And then there's going to be a Q&A session starting up at 10 o'clock. So you probably can watch that over on C-SPAN or whatever. Be aware of that. That'll be an interesting morning. That's all there is happening that day, though. That's big on the list. Looking over on Wednesday, we're going to have Governor Carney of Bank of England. He'll be speaking, so he's the Fed head over there. 5:30, inflation report. Draghi's going to have a little speech at 10:30. So we got to get some, pound volatility at night. We got to get some euro volatility during the day, just based off those two comments. We will have Aussie employment change and unemployment rate, so I'll bring up the stats for you next week and get you prepared for that possible trade. We're going to have retail sales, core retail sales next Thursday. And Yellen's going to testify again. So she's going to go this time before the Senate Banking Committee. And I don't see anything about it being released 90 minutes early on this one. But she will read she's going to read a prepared statement. It's going to be put on the Fed's website immediately. She'll be reading it, and then she'll do a Q&A. So got another one of those happening at 10:30. And then, let's see, Friday, we got manufacturing sales. I'll have to see if there's any good stats on that for the USD CAD, for the Canadian manufacturing sales report. Overall, a pretty quiet news week next week. So not a lot going on, just a lot of yelling. So, but like I said, it's going to be fun. But anyways, so that's pretty much what we have on our market wrap report for the coming week. Let's do a market wrap of where the market's at right now. And we have the S&P is up 20. You got the Dow up 150. And looking at the pound dollar up 17. Bought the euro yen up 1.3, 130 pips. All right, y'all have a great day, and I will see you tomorrow right here on the Diagnostic Trading Hour and on the Bull Bear Binary Hour in the morning at 10 a.m.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
You're watching Tiger TV.